Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Wednesday, September 10th, and we are watching Klarna shares today as the company finally goes public. We've got a lot of coverage on that topic, but we're also going to talk about who the big winners are in this IPO. And don't go anywhere, because in about 25 minutes, we have got a great conversation for you with the CEO of Atlassian. We're talking about their big browser company acquisition, about the corporate data wars, and about how the company is using AI internally. And finally, we've also got the inside analysis of a scoop that we published yesterday that Microsoft is now turning to Anthropic as it seeks to become less reliant on OpenAI. There is a lot going on. I didn't even mention Oracle. We're actually going to talk about Oracle as well. It wasn't in the intro. We're going to talk about Oracle shares, which are up nearly 40% today. But let's start with the big news this morning that Klarna is set to debut. Well, it has been a long road for the company. It has been almost 20 years. And really, Klarna, one of the interesting parts of this IPO is that it is really a referendum on buy now, pay later as an industry as a whole. And so I want to bring on someone who can share with us her perspective on where she's seeing this industry go. Mercedes Bent is the founder of a new venture firm called Premise. It is her first time on the show. Mercedes, welcome to TITV. It's great to have you.
Thanks so much for having me, Akash.
So, look, we have not talked about buy now, pay later on this show yet. And so I want to take a step back from Klarna for just a minute. Talk to us about where we are in the buy now, pay later story and the sector at large.
So the industry is one that I think a couple of years ago became very popular as a new way for the younger generations to access credit and to really spend their transaction money online on the internet. The big question with the category, as a venture capitalist, my question is this category going to become one that has primacy with users, meaning their top of wallet, they are the main provider that is being pulled out at transactions? Pulled out is actually a terminology still where obviously you can see my bias. I'm referring to credit cards. And I think this is something where we need to look at if the industry has matured to the point of reaching that first kind of top of wallet card or payment method. And that's really what I'm looking for when I look at companies like Klarna.
So just to be clear here, is the bet here with these companies they will replace credit cards entirely?
I think that would be too early to say. There isn't exactly a physical replacement for credit cards from a BNPL perspective yet. Obviously, these companies are tacking on and cross-selling a lot of different products. As someone who has been, involved in the consumer credit journey for a number of years, I'm on the board of a private late-stage credit card company.
Right.
I really closely watch where these transactions are happening, online, card present, card not present. And I don't know that BNPL is going to replace cards.
But the idea here is that the younger generations, the hope here is that they sort of turn to these buy now, pay later platforms
Exactly. The hope is
instead
that
of a credit card, right?
I think that's the hope, certainly, of the buy now, pay later companies.
Okay.
That is a real threat to the only credit card companies. If you look at, for example, Klarna's purchase frequency compared to an average US credit card, this is something they put in their S1. They're still at about 50% of the monthly credit card frequency purchases for an average US credit card. So that shows they still have a ways to go.
Right.
But I think that is something they're highly focused on.
And so let's get down to the business model here. You've looked at Klarna's financials, I'm sure. Is buy now, pay later a good business from a business model perspective?
Yes. What I look at always is, what is this company able to grow profitably? It's really easy as a credit business to give away $1 for 50 cents. And so the question is, what are their gross profit margins? What are their cohorted unit economics looking like? What's the net interest margin? There's a lot of credit specific metrics I would dive into, but on a very high level, if you just look at the gross profit, Klarna had solid gross profit last year, 44% in the year of 2024. And that is a strong indication of where they're at relative to, credit card gross profits are not often in the 70s or 80s like a software SaaS product. So it's strong. If you also look at credit losses as a percentage of their loan book, they are at about 50% of their peers. So that also shows health in their credit book.
So let's talk about the peers. You've got Klarna, you've got Affirm, you've got Afterpay, which is part of Block. You even had PayPal this week. PayPal has a buy now, pay later offering, and the CEO says that he sees BNPL being part of their growth strategy. Can you just help us differentiate between all these platforms? Do all these platforms literally do the same thing, or how do they differentiate themselves?
One of the vectors that I tend to look at for comparing this is what are the type of purchases they're being used for. Some of the players, like for example, Affirm is more well known for being larger average order values, larger purchases. Affirm was famous for their Peloton partnership and being used to finance really large, let's call it on the order of high hundreds of dollars, even thousands of dollars purchases, versus Klarna was more well known for smaller, more frequent purchases, your average every day. In the credit world, one of the questions we always ask about primacy of wallet, going back to one of my earlier kind of frameworks, is that are we being used for food, gas, and kind of the average everyday purchases? Now, obviously, that's offline transactions, card present, and I'm talking about card not present, and really, I shouldn't even be using the word card.
Right.
And so but what I do think is exciting about Klarna is that they have tapped into the more average everyday purchase behavior.
And I just want to jump in on that because that is something that I've been thinking about. Is that we've heard these stories about buy now, what was it? Eat now, pay later. The idea that the size of the purchase is getting smaller and smaller and smaller. At this point, you can even buy a sandwich and you can pay later. And one of the things that I've been thinking about is as we think about further, I guess, penetrating this market or rather increasing market share in the payments landscape, has it kind of reached a point of saturation a little bit if people are already using it for these really small purchases that, I don't just use a credit card. I don't know.
You're asking the billion-dollar question, Akash. I think that consumer credit in the US has reached a height. Earlier this year, we reached, and we constantly are on this journey, but we reached the highest amount of consumer credit that the market has ever seen. It came down a little bit in the last quarter, but there's constantly a question of, are Americans okay? Are they able to afford their average daily life? And I think that's a larger societal question that players like BNPL and credit card companies are facilitators of leverage and enabling people to have liquidity and how they move in and out of their daily finances. I don't think you can, speak standpoint to them, but I do think it's something that more holistically as a society we have to consider.
Great. Well, Mercedes, thank you so much for coming on the show. We're going to be talking about Klarna more in the weeks to come, I'm sure, as we see shares move. And I think that broader question that you're pointing to here, which is where are we in consumer spending? I mean, we could talk for many more hours about that topic. So we'll have you back on to talk about that. That is Mercedes Bent. She is partner at a new venture firm, Premise. Okay. The Klarna IPO is also set to be a big winner for many venture capitalists, but one of the biggest winners is none other than Sequoia Capital. It is certainly a full circle moment because of all the board of directors drama over the years that very much centered around longtime Sequoia leaders. I want to bring on Katie Roof, our Deputy Bureau Chief of Venture Capital, to explain to us what she found in her reporting. And Katie, it is your first time on the show. Welcome. It's great to have you.
Great to be here. Yeah, so no surprise, Sequoia made some money. They made almost $3 billion off of holding Klarna long term. They still retained a more than 20% stake because they didn't sell shares, even though they've been a shareholder for 15 years.
Okay, and is Sequoia the only winner, or who are the other big winners?
So this is very unusual for an IPO. The other large shareholders are not typical financial investors. The next largest shareholder is a family office, a Danish family office called Heartland. They own about 10% of the company. Part of the reason that a lot of the financial shareholders aren't on the cap table is, unlike Sequoia, many of them, such as General Atlantic, sold shares.
Okay. And I mean, let's go back to Sequoia, though. Sequoia has this kind of interesting history with the company. We've covered it here at The Information, all of the boardroom drama and stuff like that. I mean, gosh, just reflect with me a bit. This is it's had a winding road to the public markets, and now Sequoia, sitting on a $3 billion gain. This is kind of outstanding, really.
Sure. I mean, a couple of years ago, when there was the tech correction, which disproportionately impacted fintech, that tension led to drama within the board of directors at Klarna, and including within Sequoia, the firm. And so, ultimately, as some sort of peace agreement, Andrew Reid joined in lieu of Matthew Miller, and Mike Moritz, who is still on the board but no longer has Sequoia's board seat. So there was a bit of a bit of drama there over how to govern the company and plans on the eventual IPO, but.
But everyone's making money, so it's fine.
Right. In the end, they made money. Exactly.
Right. Yeah. $3 billion, actually. Well, look, I want to talk a little bit about the IPO broadly speaking. You cover everything venture capital, everything IPOs for the information. And, we've been sort of assessing this question on the show about when is the right time to go public? Is this the moment to go public? Do you think this was a good moment for Klarna to go public? What's your sense of that?
The stock market was at a record high, so maybe they timed it perfectly. But in general, IPOs this year have been performing very well. Tech IPOs, you look at, recently Figma just popped significantly, and clearly Klarna is predicting the same. They priced $3 above the range after raising the range. And IPO nerds know that means that they're expecting very strong demand. And it's basically assumed that it's going to pop significantly today.
And who are the other names that you're watching or that you're asking people about on your list right now?
Well, actually, there's 3 other venture-backed IPOs just this week. There's Gemini, the crypto-related thing connected to the Winklevoss twins.
Right.
There's Via, the transportation service, and then there's Figure, also a fintech.
I like how you said crypto-related thing because it's it's kind of what all these things are. They just end up being things at the end of the day. No, but I mean, this is kind of this is a question that we ask just about every investor that comes on the show: is this the opening of the window? And from your conversations, I wonder, are people rushing to the floodgates now? Do you see that happening?
Not as much as you would think. I would say the window's actually been open for over a year because once the public tech stocks rebounded, the appetite for new tech listings also was there. But considering how many unicorns there's over 1,000, we've really seen a very small percentage going public. I think that more and more are starting to get the memo, but there's also a lot of available capital on the private markets, which hasn't really motivated people to go for the IPO.
Right. Great. Well, Katie, I'll tell you what, I mean, more IPOs means more talk time with you. And I'm excited to talk with you more because as our newest Deputy Bureau Chief of Venture Capital, I think you're going to be front and center for a lot of these stories. Thank you for coming on the show. That is Katie Roof from The Information. Okay. We've talked on the show already about how Microsoft and OpenAI's relationship has grown increasingly complicated over the years. In the latest sign of that, The Information was first to report this week that Microsoft will now use Anthropic's technology for some of its tools. Anthropic, of course, is one of OpenAI's biggest rivals. I want to bring on our Microsoft reporter, Aaron Holmes, who broke that story to share more about what he's learned. Aaron, welcome back to the show. It's great to have you.
Hi, Akash.
Okay, so tell us what we learned.
Yeah, so I mean, what we're seeing here is for the longest time, Microsoft has relied entirely or almost entirely on OpenAI's models to power the AI features in its Office software that, can theoretically create PowerPoint presentations or edit Excel spreadsheets. But what I'm hearing now is that Microsoft is getting ready to launch new versions of Office Copilot that are using Anthropic models to power some of those more advanced features. And, there's a lot of speculation that this has to do with the negotiations that are going on between OpenAI and Microsoft. But, what I'm hearing is it's actually just more about the quality of the models themselves and the fact that, Microsoft found Anthropic's models are simply better at automating some of these tasks than OpenAI's models were. So I think really what this comes down to is a product decision more than anything, based on what I'm hearing.
So this actually isn't really so much a reflection of the relationship. This is actually a reflection of the quality.
That's right. And, Microsoft has been pretty adamant that it still considers OpenAI its default AI provider. And, in general, I think we're still going to see Microsoft relying on OpenAI for the vast majority of its AI tools. But I think this really kind of speaks to the fact that, for all of the talk we've heard about the AI market becoming more and more commoditized, there is still, in some cases, a really clear front runner for certain enterprise tasks. And right now, that front runner is Anthropic.
Ah, and one of the things I've been thinking about is sort of the complexities here, because as it relates to Anthropic, I mean, Anthropic has got an investment from Google, and also Amazon is a big investor in Anthropic. Amazon and Google are obviously big rivals with Microsoft, and so the fact that it's willing to go with Anthropic here, I mean, look, I mean, these are big businesses. I mean, it's not like this is uncommon, but gosh, the models must be quite a bit better then.
Yeah, I mean, it's also pretty remarkable that we're going to see Microsoft pay for these models via Amazon Web Services, which, hosts Anthropic. Amazon is, of course, Microsoft's biggest rival in the cloud. And, Microsoft also already has the rights to use OpenAI's models on its own without paying OpenAI for them, because it's invested more than $13 billion into the startup and has this, really deep deal. So I think that just speaks even more to how Microsoft right now is prioritizing trying to get Office 365 Copilot to work as well as possible and to really charm customers, and that it's not afraid to branch out and use multiple different models to do that.
Can you talk a little bit about how customers have been finding the Copilot products or the Office 365? Has Microsoft been very successful at sort of getting acceptance among customers with them, or have there been some hiccups?
There's been a mixed response so far. I've heard that customers really love certain features in Copilot, such as the ability for Copilot to sit in on your Teams meetings and send you summaries, the ability to generate emails, summarize company documents. And I think where they're struggling is with these more advanced agentic features, things like manipulating data in an Excel spreadsheet or generating an entire PowerPoint presentation is where we've heard customers say that there's still some bugs that I think Microsoft is now trying to work out.
Got it. And last question for you. I mean, again, we've made it clear this is about the product, not about the relationship. But as it relates to Microsoft's negotiations with OpenAI about their governance structure and stuff like that, do you see this having any impact or giving one party more or less leverage in those conversations at all, or are they sort of separate?
I think that both Microsoft and OpenAI have a good reason to, reach a deal that would let OpenAI change its structure and continue to raise money and eventually go public. So I ultimately don't think that this is going to hamper their talks on that deal.
Right.
But I think more broadly, it does, send a message that at the end of the day, Microsoft wants its products to be best in class, and it's not going to necessarily rely on the startup that it already made a deal with to do that if it means that it can get, better performance from a competing startup.
Great. Well, it was a fascinating story and a big one too. Thank you, Aaron, for coming on. That is Aaron Holmes, who covers Microsoft for The Information. Okay. Well, Oracle is having a blockbuster day on the markets. The stock was up 40% this morning after the company's big revenue projections. The big question now is, could you call this Oracle's NVIDIA moment even? I want to bring on Jackson Ader, who covers the company at KeyBanc, to help us make sense of all this. Jackson, it's great to have you back on the show.
Thank you. Yeah, it's good to be here, Akash.
Okay, so lay it out for us. What exactly was the projection last night that has investors in a frenzy this morning?
The projection would be the OCI revenue targets for the next 4 to 5 years. They are so far above street or consensus expectations for OCI, particularly once we get out into fiscal 28, 29 and beyond, that, I mean, you're talking about maybe not doubling consensus estimates for OCI contribution in those out years, but close to it.
You seem speechless. You seem speechless almost.
I mean, I wasn't necessarily speechless last night. I think we said in the note, it's like we were, audibly reacting to the print.
Okay.
here in our office and had to go downstairs and explain to the family, why we were so loud. But as far as the print, not the projection, it was that RPO number that was truly stunning. They put up bookings of over $330 billion. They didn't do $330 billion in total bookings in the last 4 fiscal years combined.
And just to translate for people, I mean, this is basically an indication of the business that they plan to incur as revenue essentially in the future, right?
That's right. This is contracted future revenue. It's not yet on the balance sheet, but it is off balance sheet in terms of backlog. Mm-hmm.
Okay. And they chalked this up to a couple of big customers, right? But they didn't tell us who.
No, I think they said 4 deals, 4 very large and substantial, call it multi-billion-dollar, multi-year deals spread across 3 customers. They didn't tell us.
OpenAI, maybe OpenAI.
Right, yeah. They didn't tell us who, but I know at least one media outlet that's been pretty good on this that might have some insight as to who it is.
OpenAI.
and the important thing is, and the company stressed this, that one of these deals is certainly outsized, and that's the one that they released in an 8K, $30 billion in annual contract revenue, but that the others are nothing to sneeze at and would have been worthy of call out and very substantial OCI wins if they weren't kind of dwarfed by this one.
And OCI, just for people who don't know the acronym.
Apologies, Oracle Cloud Infrastructure. It is the business that competes with Google Cloud or Microsoft Azure or AWS.
Right. So now I want to take a step back here and talk a little bit about, some of the risks that could come with this projection, because all of this is banking on a couple of big customers spending heavily and investing heavily in AI. And so I think the bull case is pretty clear. This could mean big things for Oracle's cloud business. Is there a bear case here to be made in that, maybe this relies on those customers being able to raise a lot of money, or this relies on the AI boom continuing, or how are you thinking about the risks that come with this?
Yeah. So last night we said this is the sprinkling on the parade, right? We don't want to fully rain on the parade that's happening today in Oracle, but there are some sprinkles for sure. So let's talk about financing. It's financing on 2 levels. One is, depending on who these customers are, they are going to have to raise outside financing to pay for these contracts. That creates a possible hurdle, although it doesn't seem like capital is shy when it comes to funding some of these AI companies that need the inference and the training. The other financing that you need to be aware of is Oracle's financing. We now assume that they will raise about $100 billion in incremental debt or incremental financing over the next 4 years in order to fund the capital expenditure investment required to build out this cloud infrastructure. So that's on the financing side. And then, the other thing is, at least in terms of Oracle's income statement and Oracle's financials, Oracle Cloud Infrastructure, the OCI business, comes in at a much lower gross margin than your traditional software. SaaS software is 80-85% gross margin. Support and license software is 95+% gross margin. And we estimate that OCI is maybe mid to high 30s.
Why is that?
Because, well, number one, they don't yet have the benefits of scale. Right, the economies of scale that will flow into this business are not yet there. The other is, it's just fundamentally a different business. I mean, you are providing servers and hardware to your customers that will pay you on a usage-based model, whereas software, you write it and distribute it forever. Right? I mean, it's a wonderful business model, software.
Right.
So that mix shift more toward Oracle Cloud will weigh on, we think, gross margin and operating margin here in the short run. But if numbers on the top line are going to be going up this substantially, clearly investors and ourselves included are willing to look past that.
Okay. And so last question, just to wrap things up here. I mean, you've talked about the risks here. You've talked about a lot of the if statements, I guess, that need to fall into place, the financing on both sides. Do you think this plays out the way that investors today are thinking it might, or do you think that the future is looking slightly different?
I am heartened by the fact that these are not revenue projections without backlog sitting in remaining performance obligation. You know, a lot of the look, contracts can always be amended. Like you
Yes.
said, if the AI boom doesn't actually come to fruition, certainly an open AI is going to say, "Hey, we need to rework that contract. We're sorry about that, but we just don't have, we don't have the money to pay for it." So certainly that is a risk. But I would say in terms of the projections from Oracle, I am heartened by the fact that they have so much bookings waiting to be recognized into revenue. And so that does make me feel a little bit better about these projections.
Great. Well, Jackson, thanks for coming on the show and helping us make sense of it. It's your second time on the show, and I'm sure that we will have you on more and more to come as this story gets even more complicated because, like you said, there's a couple if statements in there that need to really go the right way. That is Jackson Ader, who leads equity research for the software sector at KeyBanc Capital Markets. Okay. Well, I am really excited for this next conversation. Atlassian is a software company that many people in the tech community have become reliant on with its popular collaboration tools like Jira and Trello. And the company made a big bet last week in buying the browser company, all but declaring that it would basically be jumping with 2 feet into the AI browser wars. Now, last night, I sat down with the CEO of Atlassian, Mike Cannon-Brookes, for a wide-ranging discussion, not just about that, but also about his take on corporate data wars and what he thinks of Mark Benioff's bold claims that AI can do the work of 4,000 people. We spoke for about 20 minutes last night. Here is my conversation with the CEO of Atlassian. Mike Cannon-Brookes, welcome to TITV. It's great to have you.
Thanks for having me, man.
So, look, it's been an exciting time for Atlassian. You guys are the deal makers that everyone's watching now with this recent acquisition of the browser company. You know, we talked about this a little bit on the show last week, and we had your head of product on, and he kind of explained a little bit of the rationale. But the thing that I've been so fascinated by is that if you go on Twitter and on some of these blogs and stuff like that, I mean, some people are just confused by it, and they'll write what they want on the internet. But the tweet that I think sort of encapsulate this is that one person said, "Arc selling off to Atlassian has been the biggest letdown for nerds this year," and there are all sorts of variations like that. So I just want to ask you, I mean, talk to me about why Atlassian bought the browser company.
Sure. We have a very shared vision about where we think browsers are going. Firstly, I don't think anyone has ever really built a browser for knowledge workers, people who live at their laptop, who use SaaS apps all day, every day.
Right.
Arc is the closest that has come. I'm a daily Arc user, have been for many years. We've been an investor in Arc, an investor in the browser company, I should say, Atlassian has for a fair number of years now. And we're big fans of the SaaS ecosystem. There are many, many SaaS apps out there. Atlassian has always had integrations and played well with all of them, and we intend to continue to do so. And the second part of it is obviously the AI disruption that's happening and the ability to change browsers and build a better browser for knowledge workers who live at their laptops, who use SaaS apps all day, every day as part of their job. And I think between the two companies, we have all of the ingredients to give that a really red hot go, and that's what we intend to do.
So when people look at this deal and they say, "Oh, Atlassian is pivoting to consumer," what do you say to that?
I think we've been pretty clear that that is not the case. We have a lot of prosumer tools, tens of millions of people use Trello, use Loom. We have lots of what we call prosumer tools, used by knowledge workers in an individual capacity, and also used inside of companies, small, medium, and large across the world. We are squarely focused on those knowledge worker companies. We have 300,000 customers, from 5-person companies up to 500,000-person companies.
Right.
Always said that we're targeting Fortune 500,000, and so it would be strange for us to go out and target, mums and dads or travelers or shoppers or anything else. So obviously that's not our focus. Nor would I say is that the founding focus of the browser company. They set out to build a browser for knowledge workers, which is what we're all working together to do.
So, as you think about sort of the future of collaboration, I mean, you've talked about these knowledge workers, and we had your head of product on the show. He kind of explained to us what a knowledge worker is, and we were sort of joking about it in the newsroom that, hey, I didn't know this, but I am a knowledge worker. And so, as you think about these people using these products, and maybe some of them being prosumers, I guess, what do you think the future of collaboration looks like 3 to 4 years from now with the advent of AI?
Okay, I think it's going to keep changing, right? It's obvious that what AI can do is consume, synthesize, create, rewrite knowledge of all forms, right? We're used to it with text. We're seeing it increasingly with images, with video. Any form of digital information can be used in that way. When we talk about knowledge workers, usually that digital information is related to some sort of a job where there are no resources involved. There's often very little steel, concrete, wood, grass, whatever the resources are.
Right.
And that knowledge is enhanced by AI in massive ways. So the ability to collaborate faster, more efficiently using AI through SaaS apps and browsers is obviously a major way. The major operating system, I would argue, that most people get to their applications today, whether that's your email, your calendar, your CRM system, your project management system, your knowledge management system, whatever system you're using, you probably spend a majority of time accessing that system through a web browser.
Right. Well, look, I want to pivot to talking about a slightly different topic, which is this idea of the corporate data wars, which is something that we've been so fascinated by here at The Information. We've written about companies like Salesforce and like Atlassian making it harder for some AI platforms to access data. And I want to get your take on it, because this was a story that we wrote. And to quote from one of the stories that we published, the story read, in a document explaining the throttling moves, Atlassian said it had noticed an unusual increase in API usage and was enforcing rate limits to maintain reliable services for both Atlassian customers and partners. So this was a document that was on your website. This was a story that we wrote. And so, I just want to ask you, you provided a statement for the story, but do you see this as a risk to your business, or how should we think about that?
I don't see it as a risk to our business per se. We are always trying to be customer first. We'd say that at a high level. We've always had rate limits. Sometimes they have been published but not enforced, and other things. And you run into new technologies that can hurt those rate limits and hurt all of your customers collectively. We try to work with all our partners to make sure those limits are sensible. I will point out that our limits are more than quite a lot of our competitors, despite what that article seems to imply. And secondly, other people's limits are basically zero. So if you have a limit that's basically zero, it's not really a limit. Whereas our limits are very generous and perfectly usable, and have been for many, many years. We have always been an extremely open company, and continue to believe that open data and data exchange is incredibly important to the web, to all SaaS applications. We have REST APIs, command line interfaces, MCP servers. We have all sorts of ways to get information in and out of the Atlassian platform. And we have hundreds of commercial partners that we move data to and from on a regular basis.
Right.
So I don't think that's necessarily backed in actually the reality of the company philosophies for 2 decades now.
And talk to me about Rovo. You're building Rovo. It's a really neat tool, and it's going up against some of these other search products that have become popular in the AI ecosystem. How are you building Rovo to be competitive against a company like Glean, for example, that has gotten a lot of traction?
We can argue how much traction is actually there, but we're building the best.
You don't think? You don't think there's traction?
Oh, there's definitely traction.
Okay.
Just the amount of it is what I would contend with, to be clear.
So you think Rovo is getting more traction than Glean, so to speak?
I would be shocked if that is not the case by quite a long distance.
Okay.
We are.
You're at the center of this. I don't know.
Sure. Absolutely. Let me be clear. We have hundreds of thousands of companies that already use our search engine.
Right.
We have built what we believe is the best enterprise search engine out there for the knowledge that your company has, Some of it is with Atlassian products, some of it is with third-party products in all sorts of different manners. We have many ways to access that knowledge, which we put into the Teamwork Graph. We have, for many years, built a graph that's getting better and better every single year to enable you to access the best knowledge and the connectivity between those knowledge objects, documents, meetings, teams, whatever they are, in chat, via agents, either our agents or other people's agents, to get to it through an MCP server or a REST API, or to build Forge applications that access that data. Our relevance, accuracy, everything else that we have built in search, we would posit as very good, and it's getting extremely good customer reaction, which is the ultimate proof.
Right.
As we said, we now have, in our last earnings call, we passed 2.3 million monthly active users of our AI products, and that's going up about 50% quarter on quarter, and continues to grow really strongly. We've seen a great July and a great August. So I think we're doing very well when it comes to knowledge. That's what our tens of millions of people wake up every day and use the Atlassian cloud platform to get to their knowledge. And they have links to all sorts of other SaaS applications on a continual basis. We can process that knowledge and give it back to them in really, really fantastical ways, which is perfect for what AI needs.
Right. I want to ask you about the opportunity that exists with AI coding tools. I mean, you have coding tools within your umbrella with Bitbucket. You've also got a lot of developers using all of your tools. And so I wondered, I mean, can we expect Atlassian to make a play into the AI coding space?
So we have RovoDev, which is currently sitting on top of the full Bench rankings for writing code. It's about 3 or 4 points ahead of Claude Code, for example. And many, many customers using RovoDev to write software. We have RovoDev agents that run in various forms inside of Jira and Bitbucket to do coding plans, to actually write code for customers.
Got it.
Pull requests, adding security to pull requests, all sorts of different activities.
Right.
You also, though, partner, like if you look at our developers, what's more important is we partner with many existing tools. So our developers use Cursor, our developers use GitHub Copilot. We have many different coding tools that we run in a very large engineering team. And they all have different strengths and weaknesses. We use a fair bit of Claude Code as well. So,
and more what I was getting at is if we could expect any kind of acquisitions or M&A in that space.
Look, it's quite possible. Software teams are a significant part of our customer audience, right? They're one of the teams alongside service teams, broad collaboration teams, and strategy leadership teams that we spend a lot of time thinking about.
Right.
It's a good portion of our customer base. So we're always innovating and creating in that area for sure.
Right. Last question for you, Mike. So, this narrative that AI is coming to eat SaaS companies. I mean, you kind of sit at an interesting intersection here because you have a lot of developers, like you just said. I mean, you have a lot of these AI coding tools that your customer base is starting to use. But you kind of came up in sort of the old school SaaS era. And so I wondered how you think about that question that AI could be coming to eat SaaS, or in some cases, cannibalize the businesses.
I think it's a lazy take for most people, to be honest. And you have to understand why. SaaS is a delivery mechanism for software. What we do on behalf of our customers is allow them to store business processes, workflows, knowledge of various types, connected to lots of other processes and knowledge, and hopefully gain some sort of business advantage, some collaborative speed through the Atlassian system of work and our cloud platform.
Right.
AI is incredibly supercharging to that. AI is broadly available. These APIs are available, large language models, open source ones, closed source ones, API-driven ones, to every vendor out there. Now, that will require every vendor to think, how can I continue to do the same jobs that I'm doing? We power millions of business processes on a daily basis. Those business processes can probably be enhanced, sped up, made more accurate, higher quality with AI in various places. It's up to us to innovate, to spend our R&D dollars wisely, to put talented teams of designers and engineers on making those applications better.
Right.
There is nothing inherently to do with AI that should mean that SaaS ceases to exist or stops existing. In fact, I think it is most likely to be the opposite, but we'll have to all wait and see how it plays out. If you look at developers, for example, there's a long similar meme that AI is going to destroy software developers. There's going to be far less software developers in the world.
Right.
Take the same thought pattern to say there's going to be far more technology and software created in the world by the same number of developers. I tend to think it's going to be in the latter camp, right? If you look at most of the sensible statements from large CEOs, they are hiring more and more engineers. AI is allowing their businesses to do more, and that is empowering a drive forward. We're going to have to wait and see how this all plays out. And it's not going to be all of one or all of the other. There are going to be some SaaS companies that struggle. There are going to be some SaaS companies that profit. We are heavily investing in AI. We have a huge team, world-class, leading model adoption in everything you can see from Rovo to RovoDev to even acquisitions like the browser company and everything in between, to help our customers continue to do those jobs that they have turned to us for 2 decades to do better, faster, and quicker than they ever have before. I think that's going to deliver amazing economic value to our customers.
And on that note, very quickly before I let you go, of how Atlassian is using AI. I mean, we've seen news that the company has let go of customer service workers that has sort of trickled out over the past few weeks. And there's been a question around whether or not they are being let go because of AI or for some other reason. Can you comment on that at all? Is AI responsible for these people being let go, or what do we think of that?
Again, we've been very clear they are not being let go because of AI.
Right.
The media loves to write that. It's been a whole series of headlines.
Well, and that's why I wanted to ask you. That's why I wanted to ask you directly. I mean,
sure.
Look, okay. So
let me just say, one of our core values is open company, no bullshit. That's a core value the company has been for more than 20 years. We were very clear about that. That's a very difficult set of decisions. We are delivering our customer service for many, many reasons. Bug fixes are faster. Our reliability has gone up to well over sort of 4 nines over the last few years, and various other things that mean we get far less customers questions per customer. We have to forecast for where we're going to be. So that's led to the unfortunate situation that we have far more people in customer support and customer service, great people, than we needed. And hence we had to make some hard decisions. We slowed down hiring quite a long time ago. Various other things happened that we were very clear on why and what the reasons were.
Okay.
Now, you might argue that AI led to software development being slightly faster, which has led to the bugs being fixed faster, which has led to higher reliability. It becomes a little hard to K as an ingredient, but to say that they are because of AI is just not true.
And so then how do you think about someone like Mark Benioff coming out and saying, well, we have been able to let go of, or AI has now done the work of 4,000 people, for example? I mean, what do we make of that in the context of a business like yours?
Look, Mark likes to make some grandiose statements. I'll let him defend his own statements. I think there's no doubt that AI is going to improve the productivity and speed that business has done in lots of different ways. Think of it like better electricity. It's a fundamental ingredient to a business. It powers your factories, it powers your data centers, it powers your computers, your lights, your air conditioning, everything else. AI is going to sort of be a little bit like electricity. So it's going to be very hard to say it has done X or it has done Y. There's no doubt it should lead to businesses getting better results, higher quality of output, more quantity of output, more efficient output, to some extent better a volume of technology created, which then becomes another input source to everything else. So I think that's likely to be true. I'll wait to see other people's financial results if their employee counts go down massively. I can tell you we haven't seen any impact. As a company that has hundreds of thousands of customers and their users are knowledge workers, and we have, as I said, tens of millions of people at job every single day, we would see some impact in our expansion rates. So a customer with 100 people on average ends up as 110 or 115 after 1 year and 130 after 2 years. We have such a large data set. What we are not seeing is any change in those historical expansion rates that we've had for many, many years that is anything to do with some sort of great, a pullback due to AI.
And so what I hear you saying is that it's people can come out and say what they want. In your view, it's very hard to correlate that, hey, this headcount reduction or this change in workforce, that was directly attributed to AI. It's very hard to draw that correlation, what I'm hearing you say.
I think there are people who are going to draw that correlation in some areas. I think it's hard to have an industry-wide correlation for that, firstly. But there's no doubt it will lead to businesses being able to do more with less. Now, what they choose to do with that is up to them. Often what that leads to is higher profits or margin for a short period of time.
Right.
More competition when people go and chase those margins.
Right.
And then creating new technologies, new products, new services to fill in that, or adding better features to their existing products and services.
Right.
So I think you're going to see all of these outcomes coming as this great technology flows through, right? From Atlassian's point of view, we are hiring engineers as fast as we ever have,
right,
to try to build great AI technologies that will deliver customer value and accrue value to Atlassian.
And that kind of brings me full circle to the question that we sort of started this conversation with, which is the future of collaboration in the AI era. I mean, in this future where we have AI agents, for example, doing the talking to each other across different platforms and across different tools, what is the role of the corporate employee, or as you call it, the knowledge worker? What is the role of the people in that collaboration then if the agents are doing all the talking?
I think we mistake what agents are going to do. The people are going to have an incredible role in defining what the work is to be done. We have a lot of software programs today. Just rename AI to a software program, an agent. Agents are very powerful. I'm not diminishing the power of what AI is. We're investing very heavily on behalf of our customers in doing so. What I don't see is them just letting agents run wild autonomously and going to do a bunch of work. You are still going to have projects. You're still going to have teams of people. They're going to need to come together with this technology to achieve some sort of outcome. Can they do that outcome with better quality or more quantity or lower time? Yes, absolutely. But if you just treat them as software programs, mobile phones, we didn't think replaced whole categories of people by autonomously going to do things, but we can use them on the go to fill in time and achieve a better efficiency for all sorts of different work, right?
Right.
Wi-Fi on planes, we can do more and more times. Like, there's probably many, many examples of how this works. I don't think the agents talking to the agents will sort of magically come up with all of these solutions. They're still going to need people. Those agents still have a result. They will output a document, a process, an object. A human will have to look at that object, maybe send it off to another agent. Well, what do we do today? I get email that comes through a computerized system. I take that email and I may think about it for a while, and I go to another computer system. I may look up some customer details. I may do some other bits and pieces. I call the customer. There is going to be all of this work that still needs to happen. Companies are still going to have teams. They're still going to have projects. They're still going to have goals. They're going to need to achieve them. This is just a great piece of technology to allow them to achieve more of their goals. And
right.
I'm a big believer in human creativity, right? Those companies are going to come up with more things that they want to build. They're going to come up with more ways that they want to delight their customers. And they're going to be able to do that faster. It's going to lead to a speeding of competition. So if you're not moving fast enough to adopt these technologies, it's probably going to be a pretty painful world over the next 5 to 10 years. But for those that do, I think they will deliver. We'll all be the beneficiaries of the technologies and products and services that get created.
Great. Well, Mike, thank you so much for joining us on TITV. It is great to have you. That is Mike Cannon-Brookes, the CEO of Atlassian, and we look forward to having you on more as you look to develop more of these products to come. Thanks for being here.
Thanks for having me on, man.
That was Mike Cannon-Brookes, the CEO of Atlassian. Okay, well, that does it for today's show. A reminder that we are live on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I'm already excited for our next show tomorrow. And so until then, bye-bye for now.